You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the strategy that you need to follow on the markets. Remember, it's the last day of the week, but the first day of trade for the May month. It was a muted day of trade when we went into a holiday. That means on Wednesday, we did see the Nifty also, end just mild ahead of the holiday. And it was a lackluster trading session, narrow 100-point of a range for most part of the day. Volatility was definitely seen in the last hour of trade before the markets really shut shop ahead of the holiday in anticipation of they wanted to take out profits because of what could happen on the geopolitical front is something that the investors did not want to face right after the holiday. And we did see a marginal close below 24,350 odd mark. Developments in the India-Pakistan response to Pahalgam terror attack, macroeconomic data and Q4 results will continue to be important to really watch out for even today. What is positive is that the FPIs have continued to be buyers in the Indian equity markets. Remember, they bought equities worth about 50 odd crore rupees, 50.5 crores on Wednesday. The quantum is very low, but 11th straight day of buying action coming in from FPIs. The DIIs bought shares worth about 1792 odd crores. Remember, Indo-Pakistan tensions over the last few days, we have seen that India has, on its part, strongly objected to Pakistan's consistent ceasefire violations across the line of control during a call between senior army officials of both the countries as well. And what we've actually seen is that Union Home Minister Amit Shah has actually asserted that the government will pursue every individual responsible for the Pahalgam attack and no one will be spared. Those are strong statements that had actually come in on Wednesday late night. But the US has now been actually prompting India and Pakistan to probably work towards to de-escalate the tensions at this point in time, although they have backed India to fight against terror. That's something that they're supporting us with. And we are seeing many other countries which were earlier also tilting towards Pakistan in their response is now coming towards India, like Afghanistan for that instance. So we have to keep an eye out on how the geopolitics really plays about. As far as the cues are concerned from global markets, overnight we've seen Dow Jones climb by about 0.2%, S&P 500 added about 0.6% in trade, the Nasdaq Composite increased by 1.5% amidst the ongoing earnings season that we are seeing. Meta earnings were good and therefore that supported the sentiments in the tech market. S&P 500 in fact has marked its 8th straight day of gain, longest winning streak since August of 2024 as well. So that was positive. Asian markets this morning, they edged up a little as the US equity index futures erased the losses on Friday. After China's Ministry of Commerce has also said that it is evaluating possible trade talks with the United States. So there could be some de-escalation on the tariff front as well. And that's pulled up some of the Asian markets. Australia index was up by 0.5%. Japan was up by 1.2% higher. South Korea's Kospi index was flat. Nifty is already indicating, move higher, slightly higher by about 0.12%. And what we are looking at is about 24,400 and thereabouts is what our opening could be this morning. So we'll keep an eye out on that one as well. There'll be a whole host of stocks that you need to keep an eye out on. Auto stocks, for instance, will be very important to watch out for. Yesterday, we did see a lot of sales data really coming in from a lot of auto companies. We saw, for instance, Eicher Motors, M&M, SML Isuzu, Maruti, Atul Auto, TVS Motor Company, Tata Motors, they've all released their monthly sales data. SQ Kubota has seen its overall sales fall by 1.2%, and Hyundai Motor has seen its domestic sales decline by about 11 odd percent. Eicher Motors, we've actually seen the Volvo Eicher CV total sales rise by about 27%. That was one of the good ones that came in. Tata Motors total sales fell by about 6% year on year. And we've seen for commercial vehicles, they've also reported an 8% fall. And EV sales have also fallen by 16 odd percent. Maruti, on the other hand, its overall domestic sales rose by about 0.5% year on year. And their sales to other OEMs like Toyota also have risen by 79 to 80 odd percent. Exports have risen for them as well. So we'll keep an eye out on that. Like I talked about M&M, we've seen a 28% surge in the overall sales units. The low-cost vehicles, what we've seen is that they've seen an uptick marginal on a month-on-month basis. Three-wheeler sales, however, have been flat with a negative bias, and tractor sales have risen by 8%. So those will be some of the auto names that we'll be looking at. In fact, we have our guest on board. Mr. Mayuresh Joshi is joining in, Head of Equity Research, William O'Neill. India is now with us. Warm welcome to you, Mayuresh. Very good morning to you. Well, we were greeted in Delhi with a huge thunderstorm overnight, and it's been persistently raining. But let's hope that the clouds clear up on the skies of the markets, and finally we are able to see some direction on the street. We have been seeing a lot of volatility off late because things are on a moving and developing path. What exactly are you expecting for this entire month of May?
Might continue to be range bound, honestly. And what probably happens in terms of the action that the government probably takes against the infiltrators is going to be key. Obviously, you are going to see some knee-jerk reaction based on the reaction that India probably gives. And that is what the market is bracing for. Outside of that, I think what probably happens in the next couple of months, as far as the tariff window, the 90-day tariff window for the US is concerned, for various nations, what happens with negotiations with China will largely drive the macro landscape. And from a micro perspective, earnings have got off to a decent start. I think BFS as a space has reported decent set of numbers. You've probably seen insurance players also report decent set of numbers within BFSI. FMCG on expected lines, the commentary is a little bit soft as far as Q4 is concerned. But expectations of a consumption rebound probably means earnings might actually come back as we speak. IT again on expected lines, and it largely depends in terms of both the macro landscape back in the US as well as Europe in terms of defining how earnings will probably play out. So I think earnings have been pretty okay so far. It was always expected to be okay, so on expected lines. But the hope here is that earnings should show some sign of improvement in saliency in the first half of this year and some significant pickup in the second half. And that's what the markets are bracing. So in my own sense, May might be a range bound rate for them.
Okay, that's as far as the overall expectation is. Remember, viewers, we can also keep an eye out on PNB Housing Finance in the block window. What we have seen is that there is a block deal that's underway. There is an expectation that Quality Investment Holdings (PCC) could completely exit the company by offloading its 10.4% stake. So keep an eye out on that stock as we inch closer to the pre-opening trade as well. So that's something that you should definitely keep an eye out on. Mayurish, that's as far as the earnings that you mentioned. Let's talk about auto sales that have come in yesterday. Most of them, of course, the better ones were M&M for that instance, TVS Motor as well, slight uptick seen for Maruti Suzuki as well, but disappointment, say, for instance, for Tata Motors. And what we've also seen is probably for Escorts Kubota as well. What exactly would you anticipate on the auto names? There are a lot of moving parts externally also. We are hoping for that tariff cool off from the US on auto space. So that was one of the key triggers that played in for the last couple of days. But now the sales figures have also come in. How would you play the auto pack now?
Honestly, Sakshi, I think two-wheelers seems to be a tad bit better. And within two-wheelers, as I've always maintained, TVS has been reporting better set of numbers, both on a monthly basis as well as on a quarterly basis. And that is clearly getting reflected in terms of its price performance as well. Having said that, I think the expectations in terms of a large part of its platforms actually doing well. Even iQ, the electric platform for TVS, is doing well, considering the price point, expectations in terms of competition intensity. And in spite of that, I think it's able to maintain its volume growth along with decent margins. They're obviously expanding their dealer and distribution network across the length and breadth of the country, as well as exports seems to be back on track. So I think TVS has reported decent set of numbers, continues doing so. Valuations remain tad bit elevated for TVS Motor, but I think performance keeps on coming through on a steady state basis. I think this is one stock that you should probably keep on your portfolio. So I think, again, the whole consumption theme, the expectations in terms of urban, semi-urban, rural consumption expected to bounce back slowly and steadily. Might be two-wheelers, might be there on the radar. TVS might be top of the rack. As far as the four-wheelers are concerned, my own sense is that you're absolutely right. I think competition intensity, what probably happens with tariff announcements. Do you see a Tesla entry into the country? What happens with high-end cars, specifically when it comes to competition intensity and pricing? I think that segment of the market, which is 15, 20 lakh plus, has still remained very strong in the domestic context, and it might continue remaining strong. I think with, again, the expectations of consumption expected to come back, The more important critical aspect is going to be sales, distribution, after sales. And that is what I think a large pool of our players probably have, specifically players like a Maruti or an M&M. Obviously, I think the new models that they're expected to introduce, the pricing of these models, they've taken price hikes because of input cost pressures. But with rate cuts, expectations of demand coming back slowly and steadily, the second half might actually turn out to be better. So again, I think M&M, Maruti, if somebody is holding, may continue holding. But yes, I think these moving parts, specifically when it comes to competition, pricing, entry of Tesla into the markets, how does that play out? Those are risk factors that one probably needs to watch.
Okay, got that. So that's as far as the auto pack is concerned. Remember, viewers, we've opened higher. In fact, we also saw that 24,600 mark for a brief point on the Nifty in the pre-open trend, but it's now flattened out, 24,332. Let's see how it really pans out in trade today. A whole host of numbers that you should be watching out for, which we'll also speak to Mayuresh about. Let's look at the Adani stocks. Two of them reported their numbers, so we'll look at that. Adani Enterprises, the total income was down 7%. EBITDA improved by 19% odd, but the profitability definitely was up by a huge bump up, 7.5 times, and that was largely led by the one-time gain of nearly 4,000 crores from the 13.5% Adani Wilmar stake sale that we actually saw. 2,302 odd levels is what you're looking at Adani Enterprises. The Adani Ports reported its numbers, revenue uptick of 23% at nearly 8,500 crores. EBITDA improved by about, again, 23.8%. Margins slightly higher at 59%. Net profit up by 47.8% at 3,014 crores. And the company has also announced a dividend of 7 rupees per share as well. Mayuresh, to you, Adani stocks are the large ones, Adani Enterprises and Adani Ports. How are you looking at this space? It's been out of sight for some time, but how are things progressing here?
I think two things to watch out for, specifically when it comes to Adani Ports. I think what's the kind of expectations of trade moment specifically, I think, and what happens in terms of the container volume growth is something to be watched out for. Again, I think the kind of action that the US is probably taking against the Yemenis and the Red Sea area, I think how does that play out over the next few months is going to be extremely critical. But generally, I think the kind of volume numbers that have been reported so far, at least from an FY25 annualized basis, seem to suggest that things seems to come back on track. And as container volumes start coming back slowly and steadily, with the mechanization that Adani Ports has in most of its port operations, the consolidation and the acquisitions that they're probably doing, expectations of the acquisitions and mechanization thereof shall reduce operating costs to a certain degree over the next few quarters. And that probably helps in terms of the operating leverage as far as numbers are concerned. So the hope is that container volume should come back to normalcy and show significant amount of growth as global growth claws back. Again, the hope is completely dependent and divergent in terms of how the tariff moves probably happen across various geographies. And if there is some element of leniency that probably comes through and saliency in terms of expectations of how tariff impositions are expected to take place, including China, I think the hope is that second half container volume recovery should be fine. Similarly, for Adani Enterprises, I think the entire sum of parts, including what probably happens in terms of their SEZ operations, are going to be extremely critical because I think that is a huge sum of parts in terms of the overall embedded value or the overall valuation for Adani Enterprises as well. So how does that probably take shape in terms of both monetization as well as expectations in terms of using that in terms of their core business probably expected to grow significantly higher? I think that remains on track. So I think there are a lot of triggers and tailwinds for both Adani Enterprises and Adani Ports.
A lot of triggers here. We'll keep an eye out on this space. Meanwhile, we are getting live prices of Bajaj Auto for auto sales for the month of April that we've seen. Total sales have come in to the tune of 3.65 lakh units. Year on year, there is a 6% dip on that account. What we have also seen is that this is slightly lower than the estimates that Bajaj Auto we were keeping with. I think there was an estimate of 3.72 lakh units. It's come down to 3.65. It's also fallen year on year, 6%. And we have been seeing Bajaj Auto stock prices also lag and soften quite a bit from the all-time peak that we have seen here. Mayuresh, again on the auto pack, between the two-wheelers, how would you look at Bajaj vis-a-vis Hero vis-a-vis TVS? You already said you're positive on. How would you look at these rest of the two?
So I think if you probably have some element of differentiation, Bajaj Auto also has a large component in terms of how its export markets are expected to play out,
Hmm.
both for two-wheelers as well as three-wheelers. And therefore, I think how do export markets probably shape up are going to be extremely critical. But again, I think if you're probably mapping this in terms of demand trends and expectations of demand coming back strongly, specifically on back of better monsoons, better crop realizations, rural consumption expected to come back, urban demand expected to come back because of the tax cuts that you've seen. I think the demand differentiators, Sakshi, are going to go bottom up. So you're not probably going to see straight luxury or premium buying probably happening. It's going to be more value buying. So within the two-wheeler pyramid, I mean, within the auto pyramid, I think it might be more with two-wheelers and then four-wheelers as a rack up. Again, I think from an apparel perspective, footwear perspective, I think it's going to be those low-priced items which will start getting the volume demand that they probably require in terms of consumption drivers. And therefore, my own take is that as things evolve, a stock like Hero MotoCorp, which is more attuned in terms of rural consumption, rural India, semi-urban India, in terms of their overall product profile and overall sales mix as well, might
Hmm.
actually show signs of improvement. So I think you have to pick and choose. I think Hero might be a better choice in my opinion. But again, I think it all depends on data points, as we're saying, on how they play out over the next few months.
Okay. On the similar breath, just wanted to ask about Ether as well. The allotment will be finalized today. The subscription was just mildly, over the line, is what we actually saw for Ether. How are you looking at this pure play EV space, Ether versus Ola Electric versus the rest of the pack?
I think numbers are not there right on the bottom line. So I think it's very difficult to
Yeah.
differentiate. And then a similar story played out for Ola. I think elevated
Yes.
valuation and then the numbers just did not keep on coming. Again, I think the whole thing, Sakshi, I think you look at the intensity. I mean, it's not just restricted to Ather. I think for the auto
Yeah.
space as a whole, I think there is so much that is happening at this juncture. There are so many startups doing so many things. There
Hmm.
is so much evolvement happening, even in terms of battery technology, in terms of the powertrain technology, as an example. And as things evolve, I think you're going to see better technologies come through, better cost efficiency models probably expected to come through as well. And obviously,
Hmm.
let's not forget, I think the bigger boys within the space have everything at their behest and disposal, which probably the newer entrants probably lack. And therefore, I think my own sense is that I'm not too enthused with the Ether IPO. I think I'm still want to wait out for how numbers play out. And I think the bigger players, as I said, have a distinct advantage when it probably comes to both products, profile, sales, after sales services.
Fair point. Not very enthusiastic as far as the Ether is concerned right now. One should definitely wait it out and see how the numbers come in, and quarterly earnings will actually show a better picture for the company going forward. And of course, we'll keep hearing from the management as well quarterly basis, and then one can definitely take a view. One more number that we can discuss is Eternal. It came out with the earnings. The consolidated sequential numbers show that there's a revenue uptick of nearly 8% odd. Whereas if we look at, largely in line with the estimates, EBITDA, however, was down about 55.6%, and the margins coming in slower at 1.2% odd, net profit down by 34%. Do you think this lack of profitability will be again a big dampener for investors who've been penciling in Zomato as part of their core portfolio? Because the way Zomato is growing, the potential that everybody is betting big on, the story that's unfolding is one strong, but on a quarterly basis, the results don't show consistent performance.
Well, I think the management made it very clear last quarter that they are going to go aggressive in terms of dark store openings. And therefore, I think
Yes.
the elevated capex that is going to go through, obviously, they've got cash on its books, but it's still going to be elevated in terms
Mm.
of draining cash flows from the existing business because a large pool of resources are going to probably go into dark store opening. And it's not just restricted to Eternal. I think Swiggy is doing that, Zepto is doing that. And you're
Mm.
obviously hearing a lot of competition intensity come through. You're hearing about Reliance. You're hearing
Yes.
about Amazon. You're hearing about DMart probably having its own kind of delivery systems in place, including dark stores as well. And that probably might mean that the entire model, which earlier was expected, might remain between three or four players. I think once the bigger guys come in, I think you're obviously going to see huge competition intensity probably come through. And therefore, I think the expectation in terms of numbers being subdued with the strategy that we put in place for the next 2, 3 quarters is a given. Now, what happens beyond that, related to all these aspects, are going to be extremely critical. So, in my own sense, I think it's a wait and watch on eternal at this point of time. If somebody's not entered, I think
Yeah.
it's good to wait it out, at least at this juncture.
Wait it out at this juncture. Okay. Let's also welcome Mitesh Panchali is joining in on the program to share technicals with us. Good morning. Welcome to you, Mitesh. Good to have you with us. Tell us how have things panned out since the last time we spoke to you. Things are moving again, both on the macro and the micro front as well. On the market specifically, we have started on May series on probably a slight back foot. How would you really look at the entire season series pan out?
Good morning, Sakshi. Good morning, Mahesh bhai. Good morning to all the viewers. Basically, as I said earlier, also, Sakshi, we are cautiously optimistic for the month of May. We are not that keen to take a long position, at least for the first 10 or 15 days. We are of the view that since last 3 to 4 days, indices are struggling at the high level to actually enter into a breakout zone. So categorically, we are of the view that from here on in the month of May, we might see 3 to 5% correction in the headline index. Since last 6 trading sessions, Nifty unable to cross its immediate resistance level of 24,457, so precisely 24,500. And as far as Bank Nifty is concerned, if you look at the chart pattern of Bank Nifty as well, we may see that again the high which it has formed on 56,098 on 23rd of April, that is also not been taken out. So we are cautiously optimistic for the first 10 or 15 days. We are not aggressively going and buying the stocks into the market. It's a wait and watch. Just be very careful. If you have an open position, use strict stop loss or hedge your position, but advisable to be absolutely light on this market.
Okay. Any key stocks, Mitesh, before the markets open that you'd like to highlight where you're keeping an eye out on? Any one or two stocks?
See, I think tire stocks are looking good. So since last 2 days, we have an eye on Apollo Tire. Apart from that, within that space also, Ashok Leyland is also looking good. Adani Enterprise and Adani Port is also looking good. So these are the few stocks which we are looking at in the opening.
Okay, got that. Adani Enterprises and Ports also to react to earnings, and Ashok Leyland, as now Mitesh points out, has also come out with the numbers. Total sales again here also have fallen 6% on a year-on-year basis for the month of April, that the company has just now announced to 13,421 units that the company has just announced. In fact, the M&HCV sales, they have fallen by about 13% again on a year-on-year basis as well. So both medium and heavy commercial vehicles and overall sales have seen a decline on a year-on-year basis, and we are seeing about a 0.5% downtick on Ashok Leyland today. Let's look at the markets. Started to tick flat with a positive bias, 24,380 at this point in time, about 45 points higher in trade. Let's also look at how the Nifty Bank is opening in trade today. That's another one that we should be watching out for. There will be several banks that will be, reacting to their earnings. Fed Bank and Bandhan will be focusing on that a tad bit as well. We are looking at an opening about 0.4% higher at 55,297. So there's a 200 point of an uptick on the Nifty Bank as well. Let's look at some of the other key sectors and heavyweights. Let's look at IT. Remember, last week we have been seeing quite a lot of action on the IT pack. Again, there is an uptick of about 0.6% or that you can see within that heavyweight space. Mid and small caps, let's see whether this buying is taking shape across the broad-based spaces too. The Nifty Midcap 100 and the small cap 100 indices to see how the markets have opened there. Mildly higher, 0.2% of an uptick for the Midcap index, 54,186 is what we are seeing at this point in time. Let's even look at the small caps there as to how things are shaping up. On the small cap front, again, a 0.5% of an uptick. The advances are 779 to 726 declines on the NSE, so even Stevens there. And you are also, let's look at the kind of move that we are seeing now. The Nifty Bank is up by about 0.3%. Metals, FMCG, both are down among sectors that we are looking at. 0.3% of a fall for the metal index. FMCG down flat. Pharma and auto, although seeing some gains right at the open, about a 0.18% uptick on pharma index, 0.25% uptick on the auto space. PSU banks also 0.5% higher, now 0.6% up. One of the gainers that are supporting the Nifty bank overall, we are seeing at this point in time. Let's look at some of the other aspects as well that we can point out. In fact, let's look at the top Nifty gainers at this point to see how the markets are shaping up on the Nifty today. And the key stocks that we can definitely look at in trade. We will be looking at a whole host of earnings related focus stocks that will be in focus. And the top movers are Adani Ports and Enterprises. This was largely being expected on earnings that have come in. Mitesh was also keeping an eye here. Geo Finance, Hindalco, M&M post that numbers on the auto sales is up by about 1%. Infosys, Wipro from the IT pack is supporting the move. Axis Bank is higher by 0.8%. Maruti, even Reliance Industries is up by 0.7%. We'll be focusing on that as well today. There are about 10-15 odd stocks that are on a lower end. ONGC is down. Eternal is down by 1.8%. Eicher Motors again post those sales figures down by 1.7%. Bajaj Auto 1.2% lower. Titan, Cipla, JSW Steel. Those are the stocks that are declining in trade. Let's quickly get Mitesh. Mitesh, how is the opening and where would you keep your attention post this opening now?
Okay, so Adani Pack is looking interesting, Sakshi, as far as the opening picks are concerned. Apart from that, few stocks which are buzzing are important to watch. As you have mentioned, the entire PSU basket, that is the PSU banks, are looking very interesting. And after a very long period of time, I think now we may see a very strong action in a stock like Aarti Industries at 427. I think, yes, that is the stock which one should watch at. With a stop of 420, one can go long for the potential target of 437, 445 for the day. And again, I think some from the lower end of the range, a bit of a buying in emerging also into Asian Paints at 2442. So one can go long in Asian Paints at 2442 with a stop loss of 2400 for the potential target of 2495, 2450.
Okay, got that. We'll definitely keep an eye out on that. Let's get in back conversation with Mayuresh then. Mayuresh, banks particularly, let's discuss that aspect. Federal Bank and Bandhan both came out with the numbers. Not too very enthusiastic on the Bandhan numbers that we've got, but we do have Bank of America coming out with a buy rating and a target price of 195. They are talking about gradual MFI normalization that continues in Q4. Although the hit was that the positive was that loan growth run rate was improving, better asset quality trends, but a big miss was the NIM pressure that continues on that front. For Federal Bank, the NII was up by about 8%, profit up by 13.7%, net interest margins just flat, absolutely, whereas slight improvement on the asset quality front. How would you look at these two numbers? And then, of course, we'll come to the PSU names.
Well, I think in line. And again, I think they are not blockbuster by any sense. So I think what the market really expects is there should be expansion on most parameters, specifically in terms of core operating parameters. And that has probably not happened. Again, I think the hope is at some point of time it will happen. But again, I think when a large part of the banking universe is showing signs of improvement, Federal Bank has probably not exhibited that. And though valuations remain in its favor, I think these aspects are something which are dragging down. When the entire peers and system, large part of the system too, is probably delivering better set of numbers in terms of expectations, even on a sequential basis where they've seen improvement in core parameters like NIMs, spreads, asset quality pressures as an example. And therefore, I think it might just underperform. I think some peers of Federal Bank, like a Karur as an example, or a CSB, might actually do well in my opinion going forward.
Okay, and let's talk about Kotak also ahead of the numbers that are coming in. What is your large expectation there? Saturday, I think the numbers will come in.
No, steady state. And again, I think let's not forget from this quarter, I think the Standard Chartered book comes through in terms of the personal loan book, which will start abetting the overall numbers as well. I think two things to watch out for in terms of Kotak's numbers. I think one, I think the NIM outperformance that Kotak has delivered even in the previous quarter. Does that probably still take shape? Is the CASA deterioration largely behind us as well, like we've heard from a lot of bankers in the result season gone by. And last but not the least, I think in terms of asset quality pressure, specifically the unsecured part of the book, because they still have some element of an MFI exposure happening out there. How does that reflect in terms of the restructured and the slippages book, specifically the SME1 and the SME2 book? And how does that reflect in terms of provisioning as far as numbers are concerned? I think these three key aspects, I think, if they're able to probably just outbeat this, I think the outperformance might continue for Kotak Bank.
Okay, fair point. So that's as far as Kotak is concerned. What about the PSU bank, Rajesh? Where would you continue to keep an eye out on? And do you think, again, one can focus on that space now?
So that's for me, Sakshi, again?
Yes.
Sorry, I missed that. Sorry. No, so I think sweet spot expectation is, again, I think asset quality pressures have remained extremely steady state. They are coming off on an annualized basis and a sequential basis as well. Deposit growth has seen a decent amount of improvement across the PSU bank. And therefore, I think the kind of provisioning that they've done, I think if you probably look at the PCR ratios actually for the whole host of PSU banks, they are elevated in excess of 85-90 odd percent, which means that if the bank has the focus in terms of recoveries, which they do, anything that probably comes through from write-offs that they've done in the previous quarter adds to the bottom line. Also, let's not forget the yield movement that has happened. The bond prices are higher, and therefore, I think the AFS portion in terms of their bond portfolio, the treasury book, should also report significant amount of gains. Valuations, decent rating, rankings, institution holding has been seen canceling, also appear to be very, very decent. So I think outside State Bank of India, I think Bank of Baroda is something that can continue doing better.
Okay, let's shift focus now. Look at some of the big movers. PNB Housing Finance. Remember, there has been big block deal, 6% higher. Coromandel International about 4% up. Nuvoco about 8% higher. You have UPL that's up 3% as well. Those are some of the smart moves that are kind of gaining trend in the initial action that we are looking at into the markets. Let's also look at what's buzzing in the Nifty 500 basket. The index is up by 0.4%. There should be some smart moves that we can be marking here. Railtel is up today about 8% odd here. Iris Life Sciences is another one, 4% up. Credit Access Grameen, some move there as well. MCX, that's also moving. Within the broader markets, there is some interesting move. Railtel is also reacting to its earnings, by the way, 8.5% higher on this one. Mitesh, let me get you on the railway stocks. Anything that looks interesting here? There have been just periodic moves and specific stocks here, or do you think as a sector there is some fresh move?
Exactly. I think what you have mentioned is a perfect narration for the sector, periodic moves. So it's an occasional buys which are actually popping up. No serious trend reversal, so advisable to completely avoid this sector right now.
Avoid this sector right now within the PSUs. How about defense? Mitesh, first you share with us your views there. Remarkable moves being seen over the last 2 or 3 odd sessions on the defense pack. Many stocks have rallied, what about 20% odd in the last couple of days cumulatively. How would you really look at the defense story right now?
Yeah, so again, as far as technically defense story is concerned, I think it's what we have witnessed is a good pullback. Now, Sakshi, what is conversion of this pullback into a trend reversal and sustainability of the trend. So again, for the next few days, we'll have to really watch it. For example, Bharat Dynamics unable to sustain above 1550, 1550. So that is one stock we're looking at. And again, within the entire defense story, I think what we have witnessed in last few days is nothing but a pullback rally. So just wait for it and then we'll take it forward.
Okay, Mayuresh, what's your thoughts there? This was a space that we used to focus almost on an everyday basis when the markets were in an uptrend and the defense story was only catapulting higher despite, all of us really looking at whether a caution should be warranted because of such a sharp move. But every day the defense stocks used to surprise us with another 5-10% kind of moves. It's consolidated quite a bit for a long period of time, and with the fresh orders coming in and of course the geopolitical tensions now emerging, focus turning back here, or what should be the ideal approach for retail investors?
I think they should be very selective, Sakshi, very honestly. I think
Okay.
the stocks show huge moves and spikes. And therefore, there are tailwinds. There is no two ways about it. They've got order books for the next 4 to 5 years. Margins are decent, executing well, albeit for the last 2 quarters, execution has been a little bit off track. But again, they were working on a very high base over the last 2 years. a large pool in terms of expectations of tailwinds for the sector as a whole still continue. However, you need to be very, very selective where how you are going to probably approach this pack as a whole. Because if the earnings and the expectation of earnings do not match, there can
Yeah.
be serious corrections in these stocks as well. So I think I have a very, very stock selective approach as far as the defense pack is concerned.
Very, very stock selective approach that you need to have when you talk about the defense pack at this point. Let's also look at some of the other aspects, especially I wanted to discuss FMCG consumption, consumer durable kind of names with you, Mayresh. What's your fresh approach here? There is still nothing that one is really getting a clarity on as to what should be one's, what is the direction in which this space is moving, and whether this will have a sustainable move. So, how are you really looking at the FMCG consumer durable names? Mayurish.
I think it should bounce back. As I said, I think the entire trigger points that you're probably seeing and witnessing in terms of tax cuts, rural consumption. I think
Yeah.
both FMCG as well as consumer durables in the second half should show significant amount of recovery. Again, I think the entire place actually in terms of volume growth and pricing should start coming back. Input was largely stable. And if that probably happens, I think a lot of the elements that were against them, specifically in terms of reduced grammages as an example, not being able to pass through costs completely, because of which they took a hit both in terms of volumes as well as margins. I think that should reverse as demand comes back. So my hope is that both for the FMCG and the consumer durable segment, the second half should see signs of significant recovery.
Okay. Also discussing with you the oil and gas story, because what's happening with the crude oil of late, OPEC meetings in focus, and yet how the numbers are coming in. For instance, for IOC itself, what we have seen is that the company has reported its numbers, and Jeffries has in fact noted that it may actually continue to see inventory losses in the first quarter of the new fiscal year, while the crude oil prices have declined $10 per barrel in April. That continues to provide some figure. We have also seen Jeffrey's target, Morgan Stanley's targets of 205 rupees. That implies a 49% of an upside from the current levels as well. So, how are you looking at OMC's, the entire oil and gas story right now? Mayurish.
Again, it's just a tactical move, Sakshi, I think, because it really depends in terms of how crude prices move, right? And nobody has a handle on that. I think the expectation is that it might remain range bound. That's one aspect of it. Second, I think how refining margins play out. How does demand come back, and how refining margins play a pivotal role in terms of their reported numbers as far as the refining segment is concerned, is something to be watched out for. Third, I think in terms of the downstream product, because if you probably look at their product pool, how do the delta spreads play out, how the petchem pricing plays out. I think that has a significant role in terms of their downstream business. Fourth, I think they've got cross investments, no two ways about it. The dividend yield is fantastic with its BPCL, IOC, and that probably safeguards these stocks to a large extent. But in my own sense, I think these are tactical momentum call that you probably need to take. Those can't be portfolio bets. So I think when the momentum is in their favor, you probably play that momentum and get out once your targets are achieved.
Okay, fair point. Okay, then Mayurish, we'll let you go at that note. Thank you so much. Always a pleasure to listen to your fantastic insights. Hope you have a great weekend. We'll see you in the next week. And of course, hopefully things will be much better off as we meet the next time around too. Thank you so much. Appreciate your time.
It's actually always a pleasure, Anish. Have a great weekend. Great weekend to you as well, Mitesh. Thank you.
Thank you so much. Mitesh, we'll continue our discussion with you. There is some kind of an uptick in the markets, I think, as the first 15 minutes of a candle is out. Now we see 24,481 on the Nifty, and we can actually see 150 point of a move here. But across the board, even the broader markets, I feel, are somehow picking up some pace. Any suggestion here? 24,526 now with us on the Nifty. So how would you look at it afresh?
Yeah, okay. So somehow, if you look at the entire metrics, Shakshi, basically ICICI Bank is helping the indices to remain at elevated levels. So ICICI Bank is at fresh 52-week high. Apart from that, if you look at the chart pattern of Reliance, it is also helping. Reliance is up by 1% or so. ITC is making a new high at 429.20. So I think selected stocks, the Nifty heavyweights, are helping Nifty to sustain at the higher level. We are of the view that one need to be extremely cautious at this point of time. And if you're opening up any trade, be very clear with your stop losses and open the trade with hedge as well. That is hedging position as well. Two stocks which are coming now in the radar is first is Hero Honda Sakshi 3871. The stock has made a fresh breakout at 3865, now available at 3871. So one can go long in Hero Honda with a stop of 3840 for an intraday target of 3900, 3910. And CDSL, after a very long period of time, is now coming on the surface. So CDSL is one stock which one should look at 1291. One can go long with a stop of 1280 for the potential target of 1310, 1315 for the day. So CDSL and Hero MotoCorp are the new two entrant on the buy side.
Perfect. We'll look at Hero Moto as well as CDSL at this point in time that are coming in a fresh on the radar right now for the viewers, as well as one should definitely keep an eye out on that back. Let's look at some of the other names that are coming in. 24,500 is now with us on the Nifty. Nifty Bank is definitely helping, like we have heard it from Mitesh, but after 17th of December, we are seeing the Nifty climb up above 24,500. So keep an eye out on the Nifty at this point in time. Large heavyweight banking space supporting the markets, ICICI Bank, HDFC, and of course, Reliance Industries, 1% higher, 1420. Mitesh, what would your fresh approach be on Reliance Industries? We have had absolutely a long period of consolidation. And finally, around the earnings, the momentum started to build up yet again. We had seen levels closer to 1100. From that time also, there has been a smart recovery on Reliance Industries. But the big question comes in that for the rest of financial year 2026, should one really play Reliance Industries from the current levels?
Absolutely. I think, Sakshi, this is the stock which is making slowly and gradually its strong footing. And every single day, if you look at the stock, slowly and gradually it is giving a very silent up move. So I think majority of the people will not notice this. And again, you have very well pointed out that probably for the entire year, this is the stock which one should pick up. We are of the view that the recent low which it has formed in the range of 1200 to 1100 range, I think that will sustain, and going forward, you see a very strong up move in Reliance to the tune of 1600 or so. So yes, at the current level, I'll be a buyer in Reliance.
You'll be a current level buyer on Reliance Industries. Levels of upwards of 600, 1600 can also be expected on Reliance. Strong move over the last 1 week. If you pull the charts, you'll be able to see the momentum that has continued on RIL post its earnings as well. We have seen already a 10% near move on Reliance in just 1 week. That's the recovery that's taken shape, and that could continue. India VIX, meanwhile, is down by about 5% viewers. So there is a comfortable level that we are in the markets. The fear is lesser, and the markets may be looking to move forward. Let's look at the 52-week highs at this point. We have Coromandel International. That's at a 52-week high. ICICI Bank was already pointed out by Mitesh. Max Financial is also at a 52-week high, but that's about it. Top movers at this point, we've marked out Railtel and PNB Housing for you, and even Credit Access, Adani Ports also, Iris. And now you also have Autumn Investments and Jubilant Ingrevia also up among the top movers in trade. Most active by volume, Eternal, Vishal Mega Mart, Reliance Power, IOC, Bandhan Bank and Yes Bank remain the ones that are most active by volume. By value, Eternal now at 235. BSC 1.2% higher, Adani Ports, Bajaj Finance, and also Mazagon Dock among those stocks that are moving higher in trade. Mitesh, how about Eternal? Earnings have come in, profitability is still missing. The stock has come up from 202 odd levels back, but it has been very, very volatile. How would you look at Eternal, Swiggy, this new age tech basket?
Yes, Sakshi. Okay, so first let's talk about Eternal, that is Zomato. Okay, so I think the recent bottom is in place at around 200 odd levels, and since then it has made a very smart recovery of around 20% and made a recent high 240. We are of the view that this recovery is nothing but a trend reversal. So far, so good. The stock is facing a bit of a resistance in the range of 230 to 245. We are of the view that sooner than later stock will cross this and enter into a new trading range. So probably yes, at the current level, I will be a buyer in the Zomato Eternal. As far as Swiggy is concerned, I think there is a contra trend because Swiggy continuously after its listing making a high of around 617. Since then, it's a lower top, lower bottom formation. So even if you look at the monthly chart and the weekly chart, the buying confidence is not coming back into the counter. So I think one can, it is not in FNO. Zomato is in FNO, but Swiggy is not in FNO. Otherwise, it will be a contra trade. One should go short in Swiggy and go long in Zomato, eternal. So I think as of now, if you have Swiggy in your portfolio, probably you can book the loss and double down on Zomato. We are of the view that Zomato going forward will be able to perform in a much better way as compared to Swiggy.
Zomato will be a better pick than Swiggy, and we can definitely look at that trade also play out in space today. Markets are further moving up 24,525, and you can see just FMCG and pharma index on the back foot, but largely all the other sectors are helping the markets move up. Of course, large private banks are the ones that are supporting in terms of the key contribution to the Nifty, ICICI, HDFC, Axis Bank, and now Reliance, Adani Ports, also Infosys, Maruti, M&M. These are some of the other names that are moving up, even Trent. Mitesh, how about Trent? We have seen, of course, smart recovery from the recent lows that we saw even here. And earnings have come into now, the expansion continues on a strong footing for Trent. Can one still buy those who missed the previous rally on Trent? Do you think now they can participate yet again on Trent?
Okay, so let us look at and discuss actually two stocks which had a marathon run. First is Trend, as you pointed out, and second is Bajaj Auto from the auto pack. Okay,
Yes,
and look at the
yes.
situation of both the stocks right now. There is a heavy profit booking. Now, what happens is Sakshi, before a few months or so or a quarter, everybody wanted to buy Trend and everybody wanted to buy
Yes,
Bajaj Auto, right?
yes.
And today, if you see, there is a profit booking, and now nobody wanted to touch. I mean, everybody will think twice before getting into the stock. See, chartically, both the stocks are going into a heavy consolidation going forward. So we are of the view that probably for the next 6 or 9 months, or probably a year on the higher side, there won't be a significant return on in both these stocks. So both Trend and Bajaj Auto advisable to avoid right now. Reason is that if you buy the stocks right now, probably there are strong chances that you may stuck up because stock will not perform significantly going forward. So looking at the past rally, not advisable to get into the stocks. If you think that you have missed the bus, better you miss the bus because there are n number of buses are available where you can have a good return going forward. So we are of the view that both Trend and Bajaj Auto are the consolidated phase guys, are the candidates for the longer consolidation phase. So better to avoid right now.
Okay, better if you can miss the bus than miss the bus. That's a great way to put it, Mitesh. So on Bajaj Auto and Trent right now, they could be consolidating for a long period of time. But since you took the name of Bajaj Auto and we've been discussing before you joined in on the auto sales that were coming in, for a whole host of them, you did mark out Ashok Leyland right in the beginning. But I also wanted to get a sense on M&M, on the auto ancillaries, or SML Isuzu as well. After that big takeover has happened from M&M, there are so many changes that are happening in the auto pack. Give us a little sense on how are you looking at four-wheelers, large names, and how things are coming in.
Okay, so we are of the view, Sakshi, that's what we used to discuss in our morning meeting, that leaders never sit quietly. Okay, when leaders are sitting quietly, they are basically doing their homework. So when they come back very aggressively. So two stocks one should not forget. I think the street has completely forgotten a name of the stock called Maruti.
Yes.
No one discuss, no one is ready to discuss that stock. And in today's market share, also they are leaders. So leaders will never sit quietly. That is what we have learned from our mentors. So I think the interesting place to get in is Maruti. And I think, Sakshi, in the next 3 to 6 months, probably Maruti will surprise by crossing 15,000 rupees mark on the upside. Second leader, which people are now shorting, or probably they think that it is advisable to short, but we think that it is not advisable to short, is Tata Motors. Okay, so these are the two spaces which are completely forgotten. Maruti, somehow people forget that the stock is listed on the exchanges. Nobody talks about it. There is also no debate on this. And second, Tata Motor, people will think that now, okay, if the stock will go up by 5% short it will be available at a lower level. both both the stocks are leaders, Sakshi. They are sitting quietly only because they are doing the homework properly. That's what we feel. I think there is a significant amount of money to be made in both the stocks. We have recommended these two stocks to our client. So as a disclaimer, our client might have direct or indirect position into that. I don't have any position as a research analyst, but one should have at least 3 to 5% of portfolio weightage in these two stocks. Excellently available at a very cheap price.
Okay, that's a wonderfully put idea and very, very clear thoughts there. Leaders of the pack, Maruti Suzuki, Tata Motors, yes, they have been consolidating, but now there could be a great time to really look at these stocks if you really want to make good money on the upside. Long-term, wealth creating candidates from Mitesh that one should definitely allocate 3 to 5% of their overall investment portfolio in these two stocks. So definitely keep an eye out on Maruti and Tata Motors. I hope we will chunk this out and put it out for our viewers to really see within the auto pack the two stocks that you should definitely have in your portfolios. Let's look at some of the other aspects also now in the markets. Mid and small caps, Mitesh, for you, how are you looking at the broader markets currently? What is the strategy here? So far in the recovery in the markets that we've had, this 2,500 point of a recovery, it's large caps that have led this move. Even today, in the recovery, it's the large cap banks, that are supporting, maybe large cap IT names that are supporting. So what should one do with their mid caps and small caps positions, and how are things going to play out there?
Okay, so Sakshi, it is really frustrating because when you talk to your client saying that Bank Nifty is at an all-time high, client will complain that sir, my portfolio is not gone up by 5%.
Yeah.
Okay, so the fact of the matter is this, that the entire rally recently, as you rightly said, has been is on back of a large cap. We are of the view that Sakshi one need to be extremely selective, and the year 2025 is all about commodity. So we are of the view that I think we have already discussed this earlier as well, that chemical will come back very sharply, sugar will come back very sharply. Fertilizer is already hitting a new high, all-time high, and 52-week high like Coromandel and Chambal. Okay, we are of the view that again metal will come back very strongly, very sharply in the second half of the current financial year. So I think as far as our view is concerned, we are very clear that this year is going to be for and only for the commodities. So one should go long in commodity. And one interesting aspect, just would like to share with you, that there is a commodity related fund of funds available in mutual funds. So we are
Okay.
rightly very bullish on Brazil. And there is a Brazilian fund of fund in the mutual fund is also available. Because we
Okay.
have a limited capital, we cannot take exposure to the international market. So we are actually participating in that fund of fund and taking exposure into commodity via mutual fund. So that is also one category which our viewers can look at.
Oh, that's a wonderful idea that you've shared with all our viewers, Mitesh. So, commodities definitely is one space that you can look at, and metals are likely to outperform going forward from here. And Brazil, in terms of a fund on fund, really looking at there is something that Mitesh has really pointed out. We will definitely research a little bit more on that and get back Mitesh on board to help us understand how can investors really identify and take exposure to such interesting ideas. Of course, we have been discussing with all our viewers the importance of global exposure now for smart investors that needs to be at play in this completely volatile, very, very development-led, news flow-led market moves that we are seeing in this market. So one has to be adequately looking at those aspects as well. Since you're talking about commodities, metals, precious metals, gold, today there is slight uptick, but it has been consolidated and it's slightly cooling off from the all-time high levels in the run-up to Akshaya Tritiya that we were marking out for our viewers. Your suggestion on gold and silver, how are you looking at it now?
I think, Sakshi, I think this is the first time we are witnessing that actually gold prices are surprising the silver prices. So silver has completely underperformed the gold. And we
Yes.
are of the view that going forward, the same scenario will take place. We are of the view
Okay.
that gold will continue to shine. So even at the high level, if people think that this is a pause, I don't think so. We don't think so. There is a pause. I think going forward, 1 lakh 10,000, 1 lakh 25,000 till that price gold will shoot up and then enter into a very big consolidation phase, as what we have discussed last time, Sakshi, that gold has actually outperformed the equity in terms of 3, 5, 10, and 15-year time frame. So yes, we are of the view that still there is an upside of 20 to 30, 25,000 to 30,000 rupees is left in gold, one should not advisable to short. Sakshi, the biggest problem which the traders are doing right now is that when any asset class goes beyond his imagination or her imagination, they try to short it. The only thing which is required is that please don't short gold. If you don't like gold to move up, it's okay. Just hang on, but don't short. Okay, so the advisable thing is that if you don't want to participate on the buy side, fair enough, not an issue. But don't short gold right now. That is a clear cut advice to all the investors.
Don't short gold. That's a clear advice that's coming in. But gold is likely to outperform silver also going in the long term, and it might also surprise with a continued move against equities as an asset class, is what Manish really continues to focus on. So definitely keep that exposure of 15 odd percent to gold and silver, to your portfolios even now, because things are pretty fluid and things may continue to be on the precious metal side as well. We have 24,528, nearly a 200 point of a jump on the Nifty. The Nifty Bank is up in trade. You have support coming in from all the rest of the pockets as well. Even the rupee is at a 7-month high, by the way. It's now, come higher than 84 odd dollars. Now you have 83.87 against the dollar. So we are at a 7-month high on the rupee front as well. On the currency and what it could do to export-oriented sectors, Mitesh, any thought there?
I think, Sakshi, we are done with the depreciation of the rupee. I think
Yeah.
at the current level, we are of the view that there is no sign for rupee to depreciate from here on and go up to the level of 90, 95 kind of a thing. So I think we are not that much optimistic about the export-related sector. We are of the view that I think now, in fact, rupee will start appreciating, and at what we are looking at in next 1 to 2 years is around 78 to 80 rupees on the downside. That is on the appreciation side. So yes, one should not look at export sector to that an extent, but I think selected stocks within that is available at a very attractive price. So I think one should look at selectively, but I mean you can't paint the entire painting with the same brush. So just wait and watch and be very selective.
Okay, Mitesh, it's been an absolute pleasure listening to your fantastic insights as always, like you share with all our viewers. So thank you so much for being with us on the program, highlighting for us all the opportunities there, the strategy for investors. Hope you have a great time on the weekend, and we'll see you next week again with a new set of data points that are coming in for us to track. Thank you so much. Appreciate your time, sir.
Thank you, Sakshi. Have a great weekend. Convey my message to Shelji as well, and to all our viewers, have a happy and a great weekend. Thank you.
Thank you so much. Let's look at, wrapping up the morning trade. It's actually started off pretty well. We are now at the day's high point, 0.8% higher, 24,550 now. We are nearly a percent up on the Nifty, and that's going strong at this point in time. The first half an hour of trade has actually panned out to be pretty strong. The Nifty Bank, large cap bank supporting the sentiments, Reliance supporting the sentiments, IT supporting the sentiments as well. Across the board, all the sectors, I would say, largely are actually up and about in the green. Let's look at that aspect in terms of the key sectors. I think barring the Nifty, the India week, I think rest of the pockets are all up. So all the sectors are doing strong. Consumer durables, slight losses can be seen actually, but rest of the pockets are up. Autos are up 1.4%, driving in the faster lane. Financial services 0.7% higher, a percent up for the IT pack. Clearly one of the winners there. Metals shining bright, 1.5% higher. Mitesh is very positive on this. Remember that, viewers. PSU banks up by 0.9%, private banks up by 0.9%. Strong moves across real estate, health, care as well. Even when we talk about the BDS stocks that are up and about, oil and gas is up by 1.2%. We discussed this with Mayuresh as well. 0.5% uptake for the financial services space. The mid-cap names are also doing well at this point. So the Nifty Next 50 is up by 0.7%. Banks are up. You have Nifty Midcap Select up by nearly a percent. The Nifty 500 names now up by 0.7%. Let's actually look at some of the stocks there before we wind down the morning edition. And you'll see RailTel definitely post earnings that's rallying in trade now 10%, 11% higher. Credit Access, Grameen, Jubilant, Ingrevia, PNB Housing, Coromandel International, something that Mitesh pointed out. Adani Ports, he pointed out, now up 4.5% post earnings. Eris Life Sciences, Hindalco, Newgen Software, IOC, a strong move across the board that we are seeing at this point. All right, viewers, we'll wrap it up at that. Do stay tuned with us onto Business Today Television as we continue to track the market momentum for you throughout the course of the day. Earnings conversations will follow, and we'll also focus a little bit on the bond market today at 1 p.m. So in case you're looking forward to understanding whether bond market is something that you should be looking at as investors, then stay tuned at 1 p.m. And we'll be back, of course, at 12 noon to answer all your stock-related queries on daily calls. So do join in for that with your queries on your stocks too. Many thanks for joining in.
India is now amongst the world's most populous nation. Soon our economy will become the third largest globally. This will potentially make India the world's largest media and entertainment market. Just look at the numbers. 1.4 billion